coming from what is the next one on liquidity. Do you understand? So you have to listen attentively. So I want to use gold as a case study, right? I want to use gold. Now, what I'm teaching is universal, meaning it can work on any other pair. So I am looking at the weekly chart of gold. So first thing you need to know is that candles are ranges, right? Candles are ranges. When they say candles are ranges, what do we mean? If I was to take this candle right here, and when you're working with a single candle, you're working with the high and the low, not the opening and the close. You're working with the high and the low. And also you're working with the 50% of that candle, because that would be the 50% of your range. Now you notice how we are reacting off that 50%. It's not random. How do you know the candle you should be working with? You're working with a candle that we swept to the low recently, or the candle that swept a high. That's what you're working with. Meaning, I'm taking this candle because we swept this candle's high with this candle and closed back into this range. Meaning, I could also as well taking this candle and this one right here, and this right here will be my range. We took the high, I want to attack the low. Or why didn't you get to add to this low? We'll come into that. Now, when you scroll down maybe to your firewall chart, sorry, let me use this. I'm not so now when you check your lower time frame, you notice that this is literally descending, right? This is literally descending that I showcase daily. This is literally your range. Now, if I was to, take this and then post it on the group chat or on my Twitter feed, you do the asking me, why did I choose this low? Why did I choose this high? It's simple. It's a candle on a higher time frame. It's just that simple. But yes, Zlatan we know, but there's an ulterior motive behind it. The ulterior motive is this. This candle low, this low, created this high right here. That's the motive. So what low created this high is this low. That's my range. Your question will be, why didn't I take this low, right? Why didn't I take this low? Isn't it this the low before we make this high? Nope. I'm taking this low. Why? Because if I take this low, for example, now you look at this, it's not like we never had a reaction. We did. But now when you look at it from the weekly perspective, does it literally make any sense taking that low? That's literally me inside a candle, right? So the narrative here is this. Buy side liquidity, old highs are higher time frame candle highs. Sell side liquidity, old lows are lower time frame, are higher time frame candle lows. Meaning the sell side liquidity you're marking on your lower time frame, it's equivalent to a candle low on the higher time frame. You want to listen to that again. Oh yeah, I'm seeing this buy side liquidity, they want to attack it. I'm seeing the sell side liquidity, they want to attack it. I see the sell side liquidity, they want to attack it. I want to see them go down to this low. What makes it very important is the highs and the lows of a higher time frame. So when you mark this low, let me say you're using that low. Left from me, I'm going to say, okay, this is the whole range you're operating in. You can see we are inside this whole range, right? Now, let me say I mark out this and I'm waiting. This is literally one candle on the weekly. What makes it high probability is the weekly chart. Meaning, when they take this candle low on the 4-hour chart, I want to see how that candle closes on the weekly. Did we close back into the range, meaning back into the body of that candle? Or did we displace lower and close below? If we displace back into the range, that's signs that we might go back to the 50% and probably to the high of that candle. It's that simple. The rule says this: in a range, you want to be trading at the highs and the lows, not in between. Meaning, you're waiting for one side to be taken and you attack the opposing side. When the high of the range is taken, you're looking to attack the low of the range. And the 50% of the range is your first TP, and then the low of the range is your last TP. Now, these ranges can be applied on any candle with the lens of accumulation, manipulation, and distribution. What do I mean? You have to understand that you can apply the same theory even with the Asian range, meaning you can take just the 22 o'clock candle or 21 o'clock, whichever one that is your Asian range candle, and trade it the same way. So there are different types of ranges. The Asian range candle, the candles are ranges, that's for the higher time frame. The Monday range, you trade it the same way. Monday range low taken, you're looking for Wednesday to be a classic buy day to attack the Monday high. Monday's high is taken, you're looking for a classic Tuesday sell or Wednesday to take the low. But your first take profit is the 50% of the Monday range. So whichever range you're working with, you're marking out the 50%, right? How do we mark the correct range? The high and the low. The high that took out the low. The low that created the high. That's your range. It's as simple as that, folks. There's no, what if range low gets taken, you're aiming for the range high. You never sell after a low is taken, and you never buy after a high is taken. It's a simple rule. You have to be patient while you're waiting. It's simple. That's the rule. It's either you obey it or you get hot. Because when you're trading inside a range, be ready to get hot. The entries are the same. Your range, whichever range you're picking, you can trade it on the 5 minutes time frame or the 15 minutes time frame. For the person asking me which time frame do you use to trade the range or wherever, you can identify your range on any time frame, but your entry, you have to work on your model. If the 15 minutes works best for you, 5. If the 5 minutes works best for you, 5. but don't go down below 5 minutes. There's nothing you have no business to do with 1 minute charts. At least not at this level. You haven't gotten to that level. I'm very sure about that. So you mark your range, you wait for the low to be taken, you attack the 50% at the high. You mark your range, you wait for the high to be taken, you attack the 50% and the low. No buts. That's the rule. That's the rule. That's your edge. The moment you track it, you've destroyed your edge. When a low or high is taken, you're looking for change in state of delivery on the lower time frame to make an entry to attack the 50% or the high or the low. It's just that simple. That's your edge. Keep it simple. These ranges, you're either using a big candle on the higher time frame or Asian range or the Monday range. Those are the three ways you trade your ranges. You understand? So I'll leave you guys to digest this one. Any question, guys? Any question? Any question?
So we wait till the candle close and sweep a high or low, and on the next candle, for example, the weekly candle, we look for change in state of delivery and we enter, right?
I didn't get your question. You said what?
I didn't hear
What
that.
did you say? I didn't get your question. What did you say?
I'm telling that on the higher time frame candle, and we
Yeah.
mark low and high.
Uh-huh.
We wait for the next weekly candle to sweep that high or low, and then we enter on changing state of delivery in the next candle, right?
Yes. Yes.
Okay,
That's
thank
it.
you so
That's how it's done, yeah.
thank you so much.
So let me say, for instance, let's backtest this one right here. So let me say that this was my range right here. Now, entering the week, always mark the previous week highs and the lows. It's gonna give you nice setups when one of the sides is being swept, and it's gonna help you understand what the week might do. Are we gonna continue in that direction or are we gonna reverse? You understand? With respect to the day it's been swept. Okay, so let me say I took this candle as my range, right? I am going down to the daily because the week is about to start, right? So this is that range. This is that range. This is Friday, right? This is what Monday did. This is what Monday did. Remember what I said about Monday range? So I'm marking the high of Monday and the low of Monday, right? I'm going down to the 1 hour chart. Remember, this one inside is the Monday high and the low. So don't confuse them. So this is my range. So I'm waiting for Monday high or low to be swept, then I attack the other side, right? So this is the range of Monday. Let's see what happened. Now one side has been taken. One side has been taken, right? So the moment they go to that high, that's the high of Monday, remember you want to take the 50% of the range. You want to take the 50% of the range. So that's my 50%. Now I'm going down to the 5-minute chart. I'm looking for change in state of delivery on the 5 minutes. This one looks good. It has an order block to it. That's your entry right there. That's your entry right there. I'm going short right there using that order block. My stop loss to the high. I'm targeting the 50% as my TP1, right? That's what the rule says. And that's how you do it. You understand? And then the other one, I might let it run to the opposing end of the Monday range. Now remember, this is just a Monday range trade. Don't lose focus about that. This is just Monday range and the TP got hit right here. That's how you use the Monday range. If it's Tuesday high of the week or low of the week, you only identify that at the high of Monday. You understand? So now I have traded the Monday range. Remember to keep an eye on what you are looking for on the weekly chart. Perhaps why you will clear this drawing because you're done, right? You're done with Monday. So you don't need it again. So now we took the high of Monday and the high of Monday and the low. That's a low probability. You have to wait for them to create liquidity. When things happen this way, when they take out both side liquidities, it's advisable you stay out and wait for them to engineer liquidity and then sweep another side and then you repeat the process, right? So I'm looking to see when they take this low. That's the low of that week, right? Of that previous week, right? The day they take it, that's the Wednesday. I'm looking to make an entry to see if we get a proper change in state of delivery on the lower time frame. So for this, I will stay here and see if remember we have our entry time. Okay, so right here, this is enough for me to make an entry right here. So firstly, I want to see if we really want to go up. And you can see that we hit this guy right here and went higher. Since it is a new day, first thing I want to identify is my Asian range. So those blue line are my Asian range. I want to see them take out the low of that Asian range. I want to see them take out the low of the Asian range. The moment they take out the low, right there, I'm making an entry. And I am looking to target the 50% of that range. That is the rule. 50% and then the opposite side of the range. That is the rule. You don't change it. You understand? You don't change it regardless. You're not trading your emotions, you're trading the system. You understand? So let's make an entry. So this is a change in state of delivery, especially after sweeping an Asian low. That's high probability. So let's see. My stop loss there low. I want to attack the 50% firstly before I go for further targets. So this is the 50% right here. It's a long target. I know. Yeah, it's a long target, but that's the rule. If you're wrong once, You stay out. You don't force it. You don't revenge trade it, something like that. You just stay out. You understand? It happens. Anyone loses. You understand? So let's keep it going. Okay. I don't know where. So let's keep it going. So I'm targeting that high. Not bad. And that was a TP hit. So the 50% is almost looking like, more like a sure bet. But then that's the rule. You don't twist it, you don't change it. So the 50% is the TP1, then the high or the low is the TP2. You don't change anything. You understand? So that's literally the way you trade the ranges. Um, I would advise you guys to, rewatch this video if you feel confused about anything. And as usual, ask your questions. But then, first of all, you have to practice. There's one thing I know about trading is that no matter how long I teach you, no matter how much I teach you, no matter how many times I teach you, if you don't do the work yourself, you ain't gonna learn. You understand? You have to do the work yourself. That's just the secrets about trading. There's no shortcut to this. You either do the work or you fall off. You understand? So do your due diligence. Um, if I give assignments, try your best and do them. It's for your own improvement. It's not for me. And that's that for that. So before I close it down, is there any other question? I just gave you guys a personal model. I just gave you guys a model. Any other question? Any question? Okay, no question. So make sure you rewatch it if you're having confusions. I recorded the class, so next time you all should be safe. Good luck and good trading. Sorry, good practice.